here for financial trading software. I put together this tutorial on looking. So as traders, actually is, and it's very difficult to do so not knowing what's going to happen. So what we do is we indicators, systems, things like that to make it easier. Now, what we do is take note of what's happening. So, to put it into perspective, when I had to do some time in Chicago Mercantile Exchange around 8 years now, the reason we did that is we were developing some trading algorithms for a bank to send its to the CME transaction work, and it was a really interesting time because all we could see when we were kind of taking data, turning it into algorithms to make decisions on in and out of the market were numbers. When we were actually in the pit and we got to watch these actual traders calling out buy, it really made us understand what drives price. So calling out you know, 8 cents, and it sell out. That's start before they move on. So that's how. But since you your chart here in the form of candlesticks, really the same data, but it's been put into this easily digestible format for traders. So now we have another in the trading world, and that's psychology, and that adds so many different layers of complexity to a chart. So now we're buying and selling just pattern. So in its most basic form, let's pretend none of this trading happened. So at we're back in time here at 11 a.m. yesterday, and we are going to look at this last range bound here. Range is a place to draw in support and resistance because they probably had some historical back in time. In fact, you know, when you start, let's draw these lines on, and then we'll look at where this support resistance happens. So first of all, horizontal lines, and what we like to do is we look at the place where the price most hit. Okay, so the most hits you can get on a candlestick. So we've got quite a few here, we've got here, we've got here, we've got here testing, and here and here. So we have this kind of range being formed. And what I like to do for support is make it blue. And then what I like to do, obviously, for resistance is make it red. Okay, so we've got most amount of hits around this price here, and we're now going to put and change the color of that to red. Okay, now just quickly, if we now move to a daily time frame, you can bet your bottom dollar that, look at that, here, the red line gets hit twice, gets hit 3 times, and that is quite significant resistance there. So to be a break through some resistance on a daily chart is the feet. It happened here, only to roll over and start to test that resistance. Psychology, it's the most psychological instrument out there. It's the whole of forex. It's moving around. May and selling. So let's scale back down to our 15-minute chart, which was our trading chart. And let's start to look at this, okay? So thinking of this now, we were back here, wasn't we, where we drew this channel, and if we start to play this out as it would have, price is moving around nicely, there's profit to be had here, you could start shorting the market at this point if your system kind of allows that. So one of the entries you would have had here is again, we've got some resistance that was broken, and people may start taking shorts here. Now it's going down, it's going down, it's going down, and then can you see it hit the support? This kind of hate support and start to trade upwards again. So and again here. So if we hadn't put this support resistance on our chart, we wouldn't have known to start taking profit at this support. We wouldn't have to probably think about getting out the trade around here, because again, flip side, resistance can be used as support. So it was also likely that the profit found through this resistance. But certainly around this channel here, I would have been very and that is it's a looking to the left, drawing they are aware of. Okay? So if we was to then have a trade something like forex, which is a bouncy, volatile instrument, this is the key to your money. Yeah, I highly recommend and looking to the left.